To keep yourself updated, subscribe to Indigolearn and click the bell icon.
Friends, now we will talk about capital items and revenue items, and particularly we will talk about capital expenditures, revenue expenditures, and also after talking about expenditures we will talk about receipts. Okay, let us forget all these big words and go into real life. Say you go and purchase a bike. Okay, that bike what you purchase, tell me, is it for you to use it and exhaust its life within 1-2 days or 3-4 days and just you are done with the life of bike? No, you might use it for 5 to 10 years. So the bike what you purchase is expected to generate benefit for you over multiple accounting periods. Understood? That bike is going to generate benefit for you over multiple accounting periods. So that bike will be called as a capital expenditure. Are you clear about that? Now, you purchased bike. After purchasing bike, you need to fill fuel into the bike. You went to the petrol pump and you filled petrol into the bike. Now tell me, some 500 rupees you paid and purchased petrol. The money what you pay and purchase petrol for that 500 rupees, is that revenue expenditure or capital expenditure? That will be considered as revenue expenditure, because it's not that you need to fill petrol once. No. It's an ongoing thing. It's a cycle. You fill in, it will be exhausted in 2-3 days, and again you fill in, and again it will get exhausted. So that way it is more, the benefit of that expenditure is not over multiple accounting periods. You fill petrol today, 1-2 days you will get benefit. So that benefit generally is exhausted within the same accounting period. That is why we call such expenditures as revenue expenditures. Okay, very good. Now, you bought the bike, right? After 3 months, you need to get the bike serviced. You gave it for servicing, they changed oil, they cleaned the bike, and they gave you 2000 rupees bill. Now tell me, is this revenue expenditure or capital expenditure? Revenue expenditure. Why? Because that expenditure is also something like on an ongoing basis you need to incur, and the benefit of that will not go into multiple accounting periods. The benefit of that is only for that accounting period. So that repairs or small renewals what you do, etc., all that will be considered as revenue expenditure. Okay, very good. Then when you bought the bike, after say maybe some 75,000 was the price of bike, and some 5,000 rupees you had to pay as road tax. You had to pay 5,000 rupees towards road tax. Now tell me friends, that 5,000 rupees what you pay towards road tax, is that capital in nature or revenue in nature? That is capital in nature, because that expenditure whatever you are incurring towards road tax is essential for you to get the vehicle onto the road. Without paying that, nobody will allow you to get the vehicle onto the road. So that amount, then registration amount, so all those things will be mandatory for you to get the vehicle onto the road. So all those costs which are required for you to get that asset into a usable form, all those expenditures will be called as capital expenditures. Wonderful. You bought the bike. Now, after buying the bike, immediately you decided, let me straight take it to a center where they will change the design of the bike, make it look super sporty. I don't want it to be like everybody else's bike. I want my bike to be unique. I want it to have my identity. So that way you started working on the bike. You started working on what kind of design and all of that with the bike. And finally you gave it to somebody and you want that person to modify the shape of the bike and so on. For this, some 25,000 rupees would be incurred. Tell me, is that expenditure revenue expenditure or capital expenditure? That will be considered as capital expenditure, because that cost whatever you are incurring is expected to generate benefit over multiple accounting periods. So that also will be called as capital expenditure. Fine. Now after 2 years, the horn of the bike stopped functioning. So when the horn stopped functioning, you took it to a service center and they repaired the horn and they charged you 500 rupees. Now, is this capital expenditure or revenue expenditure? Revenue expenditure. Then, you were going on a bike, there was a signal it was a red signal, you did not see that red signal, or you saw but you acted as if you did not see and you just went over that red signal and the police saw that and police sent a challan to you or police fined you for say 1000 rupees. Now, the 1000 rupees fine, what you have to pay, is it capital expenditure or revenue expenditure? Friends, frankly, it is neither capital nor revenue expenditure. It is not an expenditure at all. It is loss. It is loss. Hare, what is this? Till now I was talking about capital expenditure, revenue expenditure. Suddenly I moved into another category called loss. Think about it. In capital expenditure, the money whatever has been spent, that expenditure gave you economic benefit, means gave you benefit over multiple accounting periods. Bike might be useful for 5 years, 7 years, 10 years, something like that. But revenue expenditure was useful only for that accounting period. Revenue expenditure generated economic benefits to us only for that accounting period. So we call it as revenue expenditure. But what about loss? Is there any benefit that gets created to you when you fill petrol into your bike? Yes, because when you fill petrol into the bike, you are able to travel maybe those 500 kilometers because of that petrol being in the bike. So it is generating benefit to you. Are you clear about that? Now, if you pay 1000 rupees to traffic police towards penalty, is that creating any benefit to you? Is that adding any value to you? No, it is absolutely not adding any value to you. So that expenditure, whatever I am saying we have incurred, that is loss because there is outflow, but that outflow does not create any benefit for us. That is why we call it as loss. Are we clear about it?